Like I always tell people, I think about it like the Golden Corral. Everybody in America knows what Golden Corral is. You go to Golden Corral, you will not feel proud of yourself when you leave. It's like smorgasbord, plates galore, dessert bar, salad bar, meat bar, nothing healthy there. But, if you go to an order of dinner with your friends, right? Rockin', you and I get together, we're going to eat small plates, right? We're going to be socially focused and we're going to consume less. And even though we're going to leave full, we're going to be more proud of ourselves than if we went to the Golden Corral. Same way with money. The more you have, the more you spend, the more opportunities you see for investment, the more salespeople sound good, and the less you take home.
Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line.
Every month in 2023, we're going to do a live Q&A call for you listeners to get all of your Profit First questions answered, along with anything you might have heard on the podcast or you want to discuss about your business. They will be on the second Thursday of every month at 1 p.m. Eastern. There is a link in the show notes to register on Eventbrite. Come chat with me live. We have another Profit First professional on today, Susanne Mariga. She, like me, does a lot more than just Profit First. She is also author of Profit First for Minorities, and she shares her journey to Profit First with us. She will also share tips about building reserves, weathering storms, and profitable tax strategies. Not just giving other people money so you don't have to pay taxes, which is silly. She is a CPA, a fractional CFO specializing in high net worth tax strategies for 7- and 8-figure entrepreneurs using the Profit First system. She is CEO of the Mariga Group, which is part of the Goldman Sachs 10,000 Small Businesses. She was 2021's Profit First Professional Firm of the Year, and she's host of the Profit Talk podcast, where I was recently a guest. Before starting her own firm, she was part of Arthur Andersen as well as KPMG. She combines her industry knowledge with her own experience of growing a small business, and that allows her to help clients design unique, profit-first-based business plans and ensure their success and their long-term financial stability. Let's meet Susanne and learn from her.
Welcome to the Profit Answer Man, Susanne Mariga. It's great to have you join us today.
Rocky, I'm so happy to be on your show. Thanks for having me.
I'm excited to chat with you as well. Can you share a little bit about yourself and your business?
Sure. Well, I am a CPA by background, and we specialize in providing fractional CFO services with a high net worth tax strategy focus. So we work with a lot of 7-8-figure entrepreneurs and helping them optimize those operations and figure out that break-even point, optimal pricing, getting inventory in line. And then once they're super profitable, right, which happens on Profit First, we work on the high net worth tax strategy side.
You know, I would assume if you got your business to 8 figures, you would know all these answers.
Oh, you'd be surprised. I have seen $50 million companies run at $1 million loss. And trust me, my jaw dropped.
I think everyone else needs to understand that. Growing the top line doesn't necessarily put money in your pocket.
Absolutely not.
So how did you learn about Profit First?
So I have to admit, when I joined Profit First, Mike says I was one of the founding members. I joined Profit First. I had gotten a recommendation actually from a friend to read his book. I read his book for me. I'm going to be honest, because, I was just like those $50 million companies. I was focused on top line. I was focused on our government contracts. I was focused on growing our book of business, but profitability was something that I was having a hard time catching up with, right? Because we were focusing on reinvesting everything, right? Putting in advertising, hiring people to create fulfillment, but of course, cutting those prices low in order to get the contracts. And so when I read Profit First, I was like, I need this, sign me up, And of course I said, yeah, I'll help other small business owners too. And so that's my story with Profit First. And it was an amazing game changer, absolutely amazing game changer. It changed my life, changed my business, allowed me to become the first millionaire in my family. Profit First has been absolutely amazing.
I'm confused. So you worked at Arthur Andersen. For those of you who don't know, they're the people who, well, maybe I'm not confused. They're the people who did the books for Enron.
You got it. The Let It Snow commercials. I was not in Houston. I was in the Chicago office at the time, but our friends in Houston apparently got in some trouble. But yeah, I started off my career with Arthur Andersen in the Chicago office and later moved to KPMG once the firm closed. And then when I had my daughter about 15 years ago, started my own practice.
So you worked for another of the big 4 accounting firms, and yet you still struggle with profit.
Absolutely. And, it's just like we talk about, right? It goes back to Parkinson's law. The more you have, the more you spend. That's just how our bodies are. Like I always tell people, I think about it like the Golden Corral. Everybody in America knows what Golden Corral is. You go to Golden Corral, you will not feel proud of yourself when you leave. It's like smorgasbord, plates galore, dessert bar, salad bar, meat bar, nothing healthy there. But, if you go to an order of dinner with your friends, right, Rocky, and you and I get together, we're going to eat small plates, right? We're going to be socially focused and we're going to consume less. And even though we're going to leave full, we're going to be more proud of ourselves than if we went to the Golden Corral. Same way with money. The more you have, the more you spend, the more opportunities you see for investment, the more salespeople sound good, and the less you take home.
And I think that's really the key is the more you make, the less you take home. And I see that so often all the way up, well into the 8 figures, pushing 9 figures. Business owners are up there. Hey, I hit 9 figures. I worked more and I made less, and they never got off that hamster wheel. And that's really what this is all about, is to stop that.
Absolutely. Absolutely. And, it's interesting because it starts with a kind of like an illusion. I remember like when I first started my business, the goal was just to make $100,000 a year, take home $100,000. And, once we met that salary, I just kept the salary the same. Even though the revenue grew, I just kept it at $100,000. And it was interesting because at that point, most of my bills were being taken care of, but I really capped myself with a number. And really what I like about Profit First is that we use percentages, right? Your owner's pay should be a percentage of your real revenue. Your profit should be a percentage of your real revenue. And you should be rewarded as your company grows, not just your vendors.
That is correct. That's why I like Profit First, because it is also percentage based. So the more you make, the bigger your number of dollars. The percentage stays the same, but the number of dollars continues to grow. Too often people say I'll be profitable when, and when never comes. So let's start now and let's make it happen. So you wrote the book Profit First for Minorities, which is very different than all the other Profit First books, because every other Profit First book is for a niche of business, but you did it for a niche of people. Why did you choose that?
It's interesting. I'm a woman of color, right? I don't know if this is going to be video or audio, but my mother's African American, my father's Chinese. First one to go to college in my mom's family from a legacy of sharecroppers and slavery prior to that. And it was a big deal. When I graduated from college, I graduated from Ohio State. And my entire family came down. You would have thought I would have graduated from Harvard. Like literally, imagine these middle-aged, huge behind women, hugging you in a circle because they're just so proud that, oh my gosh, our first person in our family just graduated from college. And, when I graduated from college, I went to work for Andersen in Chicago. And one of the first questions I asked when I moved to Andersen, I said, where should I live? Where should I live in this beautiful city of Chicago? And my coworkers, they were just looking at me and they're like thinking about themselves. And they're like, you should live in Lincoln Park, right? Which is a very nice side of Northside Chicago, or maybe Lakeview, right by the Wrigley Field. But whatever you do, don't live on the south side of Chicago. Like, look at me. I guess they didn't see that part, right? They're like, just don't live on the south side of Chicago, whatever you do. And I was like, okay. So I came to Chicago. I signed my lease right in the middle of Lincoln Park, right by Diversity and Sheridan, big, huge view of the lake. And one day I was sitting at home and it was a Saturday afternoon. I said, what? I'm curious. What is the south side of Chicago that these people were so passionate about that I should never go? And I just caught a bus. I caught a bus that literally was right in front of my house. And I said, I'm just going to go as far as this bus goes. And then I'm going to catch another bus because I love adventure. So I took this bus. The bus ended right at around Michigan and like Roosevelt type of area. And then I just caught the next bus, and the next bus literally went south. And as we were riding this bus, I started to notice the terrain started to change. You went from the lovely Lincoln Park, lovely Michigan Avenue, and suddenly you were getting to areas that were boarded up. You started to see people pushing shopping cars. You started to see, garbage bags, right? People carrying garbage bags or just garbage bags on the street. And it was a very different environment. And I started to ask myself, how can we be probably less than 5 miles apart, right? Because Chicago's not really that big, but you have such economic disparity between one side of the city and another. And as I was thinking, what is causing this? I even went into the grocery store and I was like, the fruits and vegetables are actually kind of rotten down here on the south side. Like, what is this, food desert? What's going on down here? And it clicked to me, the way that we change communities, the way that we equalize wealth is by having successful businesses in the community, right? Because successful businesses provide jobs. Not only do they provide jobs, but they provide examples, meaning that, if I see my mom just became a doctor or she just hired my cousin to be her front desk person, maybe I can do this too, right? It has property tax value, right? It includes sales tax. That was like really my passion area for writing this book because I wanted to change communities. I wanted to equalize wealth, not just in the north side of Chicago, but I wanted to see it on the south side of Chicago too. The other thing about the book is it's a book that keeps giving. Part of the proceeds of the book actually goes towards Hope Worldwide, where we provide scholarships to Zimbabwean girls. And yes, I picked girls, Rocky, because, usually like a lot of times in families, the preference is to send the son to school, the daughter is going to get married. And so I purposely picked young girls because I wanted these girls to get an education. I wanted them to go through elementary and secondary school because the government actually pays for these kids to go to college. And imagine a country where there's polygamy, right? Where you get married and your husband might pick a couple other wives too. But imagine you being a doctor, being a woman, it's going to be hard to convince her to go ahead and live a life of polygamy.
I can see that. So it's about giving back more so. Is there something unique or different within that community that the message of Profit First has to be different? Or what was it that was different than compared to, say, the regular Profit First book or any of the other subspecialty books?
So what I liked about Profit First for Minority Business Enterprises was I purposely didn't focus on the statistics. right? Because the reality is statistics are against us. Every statistic is against us. Statistics says you can't do this. And instead, what I did was I focused on the success stories. I focused on the stories of entrepreneurs that were killing it, not just in revenue, but in profit, that were buying their buildings, living their dreams, creating multi-7-figure companies and having profit to show, because I wanted to focus on the outliers. I didn't want to focus on the average. We all know the average, right? Because the outliers, that's the key to success. And so those were the stories that I told, the stories that I investigated, and the stories that supported the concepts that we talk about in the book.
Nice. I like it. And I enjoyed reading it and going through it. And I like to read all of them because they all have little nuances to them and having a different take and seeing how it all comes together. So let's kind of shift gears a little bit. One of the things that I think it came out of the book, 6 months of cash in the vault account. And I don't think we talk about this enough. And I know my clients are always asking me, how much cash should we have? And I always tell them, let's get to, I used to start with 2 and then 3 months. Now seeing all the uncertainty in the marketplace, I'm like, 6 months would be wonderful. It just seems to take forever for a lot of them to get there. They constantly struggle. But I think it's a question business owners have, is like, how do I know when I can take money out? And I've read a couple other books that are different than Profit First, but I think the key was, hey, you need to have a large enough reserve to take you through turmoil. Because let's face it, we're all going to deal with turmoil. And so cash just is kind of the oil that gets you through and allows you to survive the turmoil. Is 6 months reasonable?
I think 6 months is amazing. If you can get 6 months, I think that is a great goal. And I think a lot of people that we work with, they're starting on Profit First. And so it's a ramp up to get to that profit. Nobody starts at their profit allocation. Some people are starting from negative profit, and it's kind of like a drastic turnaround overnight just to make to that 1%. But it's about building. And so in that building period, it is hard to get to that 6 months because you may be starting with a 1% profitability, right? And building it up from there. So it is going to take a while. And I think it's important to be patient with yourself too, that, it's about applying the action, taking half of that profit every quarter, making sure that you put it into the vault account, making sure that you do the debt snowball in order to reduce that debt and get to eradicate that debt. Let's just use the word eradicate, right? Just be patient with yourself. One of the things that we do is, I quickly drain that account, we had a conversation offline about putting it in personal investment accounts too. And again, I like to do that because if my company has to borrow from me, which is what it's doing when it has to go into the vault, I want everybody to be and know that I'm upset. And so it doesn't happen. But definitely having some type of reserve is very, very important because there will be a time if you're doing government contracts, right? Your government might pay you 60 days, 90 days late, right?
So it might not even be uncertainty economically or lack of sales. It just might be some vendor didn't pay you for another 30 or 60 days, which happens. And sometimes they don't pay you for 90. Or if you have one person with a large bill that doesn't pay you, that really can suck up a lot of cash flow and cause a lot of turmoil throughout the rest of your business. So we definitely see that happening. Since we're talking about that, uncertain times are always around. People seem to ignore them. And sometimes they're local, right? Sometimes they're a national recession. Sometimes it's personal. You might be going through uncertain times in your particular situation. What are some ideas for being proactive in these situations?
So I think that, there's a couple of different things, and there's so much flex and change that's happening in the world right now. Probably 10 years ago, it was a very localized community, right? Your customer was the person down the street from you or in your community. And now in a lot of cases, maybe the market can become a national market or even a global market for you. So first of all, it's important to not limit yourself to your backyard. I mean, I get it. The plumber is the plumber And that's more of a local market, but there's opportunities to franchise your business if you're killing it and doing it well and setting an example and setting the pace. And then again, you're suddenly a national market. So I think, first of all, just realizing you're not capped into a size. You're beyond your local market. I think another great thing, just like you talked about, Rocky, it's about the discipline, right? It's about the discipline with the everyday. And I think that when you're going through economic shifts and economic change, for me, my budget is my best friend. It may get done in January, right? But it's a moving, living document. We got January budget. We got a June budget, right? And June may not look anything like January. We may have crossed into another tax category, or we might be pulling back, right? Depending on what's happening. So having that budget live and grow with you, right? I think it's important to stay flexible too, right? Don't get stuck in those fixed costs. I can't tell you, especially you go in those doctor's offices or those large law firms. I'm like, you signed a copier lease for 5 years. Like, what's that machine going to be worth in 5 years? Like, how many times did you pay for that machine? Can't we just get everybody a brother, like multi-functioning machine on everybody's desk? Like how many copies do we really need to be making these days? But avoiding long-term commitments, do I need a 5-year copier lease? Maybe instead of a long-term lease, because reality is we kind of found out we could go home, right? And work from home. Maybe a shorter term lease that leaves us more flexible with options, because, reality is we are in not just a financially pivoting type of economy, but also political and social type of economy too. So keeping that flexibility is really key to that, and embracing that you're not limited to your current market.
I think that's what COVID taught everyone, is that life happens and you've got to be flexible, and the long-term commitments are an issue. And that is what's happening for people who bought commercial real estate in certain locations. Every day, more and more, I'm reading of large buildings, like hundreds of $1 million buildings, and the owners are handing the keys back to the bank and walking away. And, they didn't plan for downtimes, or they didn't realize that these things happen. And I just would have assumed, had they done their cash flow and did the right projections, they should be able to weather these storms. But I don't know what they did. So who's to say? They struggle.
Yeah, no, I totally hear you, Rocky. One of my favorite places to stay, and you and I both go to ProfitCon every year for us Profit First professionals. But one of my favorite hotels of all time has been that Crowne Plaza right on Times Square. And last time I was down there, it's been closed since like the COVID year. And I stayed at another hotel. I think it was like the Westin. It was like right across from it. And I just remember like just looking at it, like salivating, like, why won't it just open again? Just open again. Just open the doors, right? But you're right. Big major buildings are closed because of not being able to make those financial commitments.
Actually, one of the other reasons they're closed, and it's gotten better, they can't find workers.
Mm.
They can't staff they probably have multiple hotels, and they're like, well, we can barely staff this hotel and this one, and they're not full. We're not opening more rooms until we can get workers to clean them, open. Like, that's what I saw. We traveled a little bit during COVID and as, the time progressed, and we would walk into massive places. The restaurants were all closed, or half of them were. They'd only be open this little time, and it was ridiculous. And it was one of the reasons that we've kind of pulled back from travel, is it's no longer fun.
The lack of labor, it will change your business plan in a second. You're absolutely right.
And I think for most businesses, they're also seeing an increase in labor costs massively. So if you haven't increased your prices, wake up. It's time to increase prices. Everyone else is. It's called inflation, and you've got to keep up on the curve. Otherwise, you're making less and less, and that's not fair.
Absolutely. Absolutely.
So you come from a tax standpoint, and you talked a little bit about tax strategies. I'd like to touch base on this, because what I find most often is people use tax strategies that wipe out all their cash, or they use tax strategies that, while they don't have to pay taxes today, it eats up all their capital, and they forgot that they put all that money in there and it disappeared. So they're spending $1 to save 30 cents or $100 to save $30, and it's not wise. For the small business owner, what are some great tax strategies that we can use that also allow us not to overspend and to still build capital?
So, and I think that's a great question, because there is definitely a wrong way to save for taxes, and that's going out and buying things you don't need, right? I think we all struggle with it. Even your favorite tax accountant struggles with it. You're like, oh my gosh, how much taxes am I going to owe this year? And suddenly that cabinet, looks pretty enticing, you know what I mean? Or people run out and get those like nice heavy cars that take up all the gas and cost you like $100 to fill it up, right? to get it right off. And those are the wrong ways. Unless you really need a truck, those are the wrong ways to save on taxes. So one of the first things we like to do is we like to look at what is the goal of the business owner, the taxpayer. And, one of my goals, I'm sure, Rocky, one of your goals is, retiring. I want to retire one day, right? And if this is a closely held company and it doesn't have like a lot of employees, maybe there's a way that I can put away some serious dough, right? And save taxes. And yes, technically it costs me on my P&L, right? Employee benefit, but I'm just passing it from my right hand to my left hand. It's still Susanne's money, right? And so looking at, and I'm not talking about your little IRA accounts. I'm talking about a true 401k. I'm talking about profit share. I'm talking about maybe even entering a pension plan, right? If it's a closely held company, and putting away some serious money, $58,000 for a person, right? So husband, wife, you double that, 120. Cash balance plan, depending on my age, might be quite a bit of money I might be able to put away, 100,000 or more. But again, what I'm doing is I'm deferring it, right? And I can always control how I'm going to draw this money out. Now, I know there's like required minimum distributions, like when I turn 70, but I can always, the required minimum distribution probably isn't at my 37% tax rate, right? We're talking about that. So, and I can always control how much I'm going to take out. So that's one of the things that I do, income tax shifting, from high brackets to low brackets, right? My kids, they are amazing workers. They're eager, they love social media. They want to respond to my DMs, even when I don't want them to do. Maybe I can hire them if they're making less than a standard deduction, right? It can be federal tax free depending on the type of legal entity that I'm in, right? If I'm an LLC and I'm filing on my 1040 Schedule C, it might be a really nice tax write-off hiring my son and, my daughter, right? So again, it's looking at what are my goals. I mean, I was going to probably pass the money to them when I died, but why not give them some good work experience, right? And let them get paid for learning a skill. And by the way, they can pay for their own dance lessons. They can take mom and dad to Disney World, right? So again, looking at the goals of the business owner.
And I think that's a big part. That's what I like with, if you do it right with hiring the kids, you can pay the kids. They don't have to pay Social Security, depending on the corporate structure. If you keep it below that amount, they don't have to pay taxes. You can now fund their Roth IRA, which the Roth IRA doesn't show up on the FAFSA for college. So there's these little tricks and so forth. But more so, it's no longer, Mom, Dad, I want money. It's like, hey, kid, go sweep the garage and you can have money to go to the movies this weekend. So rather than you just handing them money to go to the movies, you're actually getting a tax deduction off of it, and you're teaching your kids some values and showing them how much work it takes to go to the movies.
Exactly. Like my daughter, I was in a business meeting this week and she texts me over and over again. She's like, Mom, can I transfer $50 from my own savings account into my checking account so I can take a pottery class? But again, it's her asking herself to spend her own money, right? That she's earned. And
that's the way to do it. There's no reason that you want to pay for their stuff if you don't. And that's the appropriate way to do taxes, is to move money to another name of yours, so to speak, meaning the retirement account or something else, and be able to do it that way. And again, another nice one is, people don't always think about it, but if you buy the building you're in, real estate gives you some pretty nice deductions, and you can play with that between your rent, which gives you deductions on the corporate side, and then your real estate actually may not even be tax consequence positive. So you might not even have to pay taxes, even though you're building up considerable wealth on that side. Exactly. And again, everyone has to figure out what is good for them, which is what you started with. You've really got to think about what is good for you and not just buy stuff that's depreciating. I'd rather you do something that makes much, much better sense. Oh,
yeah. You can get into cost segregation studies with the building, especially if you're high net worth, and knock out a lot of that profit in a building that's still an asset, right? We call that paper money, not like real money.
Is there anything else with regards to profit first, being profitable, running a well-run business that we should have talked about, but we didn't get a chance to?
I think the important part, and, Rocky, I know with a lot of the strategy work that you do with your audience and your listeners, it's about, figuring out what's important to you, right? Until you connect that why, right? Until you connect the why with the actions, that's really what's going to trigger you to get your goal. And so it's about knowing what it is that you want, right? And creating that goal based upon the outcome that you're really striving to get. So that's really the key with making profit first work.
I like it. If people would like to learn more about you, your book, your services, what is the best way for them to do that?
So the best way is to grab the book, and it doesn't matter if you're not a minority. We won't tell that you read the book. It's a great book, whether you're a minority or not. Amazing tax strategy, but it's called Profit First for Minority Business Enterprises. You can check it out anywhere. Bookstores carry it. Amazon carries it. Definitely, it's an amazing book. Kirkus Review, Publishers Weekly, Editor's Peg. Check it out. Profit First for Minority Business Enterprises, whether you're a minority or not.
I like it. Thank you so much for joining us today.
Thank you for having me.
How are you doing at building up a 6-month cash reserve? I tell you, you sleep 10x better at night when you have it. Problems still occur. You just have the ability to get through them. Do you save on taxes, but lose all your cash and then struggle with cash flow? That's what most people do when it comes to tax planning. They don't realize that tax and cash flow planning need to go together. One of the best ways to do tax planning is funding retirement accounts. Also paying your kids. There's a whole bunch of ways that you get to keep money and pay less taxes. What I really love most about Profit First is we're all a family, and we know there's enough business for all of us to thrive. So find one of us who can help you thrive and call them, or just keep listening and implement it yourself. You can do that too. Remember, you don't need more resources. You need to be more resourceful. And remember to focus on the bottom line.
If you'd like for us to be a part of your profitability journey, we have different programs available ranging from do-it-yourself to one-on-one coaching. Our course, The Profit Blueprint, teaches you everything you need to know to transform your profitability. There are 3 different tiers ranging from DIY to done with you so that businesses of all sizes can get the support that's best. Join the waitlist in the show notes to get more information and be a part of the next cohort. If you want a done for you service, you can hire us as your chief profitability officers. We only work with a handful of clients, so they all get our full attention. We work with business owners who have or are growing to $500,000 to $10 million in revenue. You can use the scheduling link in the show notes to get on our calendar for a good fit conversation to see if we're the right people to support you and how we can help you.
This episode of the Profit Answer Man podcast is brought to you by SMBpodcastnetwork.com. The network is a collection of podcasts and shows from around the internet which focus on bringing you interviews with amazing guests who share actionable advice, ideas, and information for small and medium-sized business owners and entrepreneurs. Visit www.smbpodcastnetwork.com to find more great shows and easily subscribe to be notified of new episodes. It's a great way to discover quality content. If you've discovered us via the network, then I hope you enjoy today's show. and will consider subscribing directly so you never miss our episodes. Remember to check out my other podcast, Richer Soul, where we talk about how to live the ultimate life and be the best business owner you can be. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.